Hello, this is Steve Malone with Compass of X. Hope you're doing well today and getting some good trades. Today I had a trader write me and ask me about a particular indicator. Now this particular indicator, as with all indicators, has its advantages and disadvantages depending upon your trading style and your trading objectives. Now me personally, I found it over the last few years that this particular indicator is one that's kind of a take it or leave it. Some traders like it. Many traders that I know personally really don't care for it that much. If you take a look at it, looking from a backtest perspective, it literally plots perfectly like you got to use this indicator. However, in real time it has tendency to either lag the market or repaint or replot itself as the market makes a progression in a direction. So let me talk about this particular indicator. It's referred to as the Zigzag Indicator. It's designed to literally plot previous highs and previous lows. It's a trend following indicator, but yet it lags the market a bit. As you can see in the EuroCAD chart, it did plot previous highs and previous lows. That's one of the significant things about this indicator, and it's a strategy that some traders use in looking at those previous highs and previous lows, and I'll get to that in a moment. With these highs and lows, in some situations it does give us some indication of a price reversal. However, that price reversal often comes to us a bit late. As you can see in this situation, we're 3 bars back from the current high point that we have. And you notice that it hasn't plotted to that high. Now, depending upon the deviation setting, we might actually have a plot if I tighten this up a bit. Now, one of the other things that people like about this particular indicator, and I'll move to another chart here, is it shows a couple of key things depending upon your trading style. If you're looking for chart patterns, it does a pretty good job of that. As you can see here, we have a double bottom. Also, for those traders who like to look for the Elliott wave or do a wave count, you can see here that we have 1, 2, 3 wave count right there. One of the other advantages that some traders like about the Zigzag Indicator is it has a tendency to remove some of the noise by price action by simply plotting the highs and the lows. However, as this was plotting, it would move up to a high, then come back a little bit, move up to a new high. So literally this high point would move from here, then possibly move to this point, then move to this point, and then so forth and so on. Now, as I said earlier, when you take a look at some of these situations, you can see, like today, I've noticed that the Aussie CAD has moved from that low point and was showing a potential upward move, and then after the FOMC announcement came out and the market started making a strong move down in the Aussie and we saw some weakness in the CAD, we saw this move down from that point as a possible low to this point. So if you're going to use the Zigzag Indicator from a strategy point of view, you've got to consider the lag. It's very important to understand that the last leg displayed in the zigzag chart can change based upon price. Literally, this moved from this bar, went to this candle, and now it's moved to this candle as price continues in a direction. So given that, the best way to go about using the Zigzag Indicator from a strategy point of view, looking at an entry or exit scenario, you may want to use some additional indicators to confirm. But here's one specific technique that you can use. Now, I would recommend that you use this technique on like an hourly, 4-hour chart, daily chart. Use it on the higher time frame charts, and this is simply how it goes. You take any 2 points and you draw a trend line. So from this point to this point, from the past, you draw a trend line. And what we'll be looking for is as the market breaks that trend line down, that's the trade we'll be looking for. I'll give you an example again. Here's a situation here from this point to this point. We draw a trend line and you see the push to the upside. In that case, you have a particular strategy. However, for those of y'all who have the synergy model, you can see you could have done the exact same thing using the TDI. Connect lows to lows and come across, and you would have had actually a little bit better opportunity from that standpoint. Look over here from this high to that high and across. Again, we had a little bit sooner entry here than waiting for the big move to this point. That's the strategy. Now, you can come in here, and let me pick another chart. and you can come in and you can change to a different setting. Here's another potential setting that you can use, and you can see here that in this case we had a situation where from that point across this point here we had an opportunity to trade. Again, same situation with the Trader's Dynamic Index, could have had the exact same scenario right there at about the same point. So changing to a smaller deviation setting, you might be able to use the zigzag to help you identify potential points. Now when you look to enter on this type of trade, look at that low point, the previous low point, as a stop loss, and then do a calculation as to where the market may go to the upside. That's why I suggest using an hourly or higher time frame chart, because of the way the market may be. Again, consider the overall trend, maybe use a couple other indicators to confirm direction when using the zigzag indicator. Well, this is Dean Malone with CompositeFX. Hopefully some of the information here for those of y'all who may be interested in the zigzag indicator may help you. Y'all make it a great day, get some good trades. We'll talk to you next time. Bye-bye.